All right, guys, we're going to get down to it right now. Make you some money. My stock suggestion is Outerwall, ticker symbols OUTR. I actually had this once before on the show, been extraordinarily volatile. Now, remember, they're known mostly for those red kiosks where you can go, you can rent a movie, video game. But their Coinstar business has been reinvented. It used to be those machines. You remember you used to put the quarter in and they would move, and if you got lucky, you got 3 or 4 quarters back. You mess around with them when you get a to-go dinner somewhere at a diner, right? But now these kiosks, the whole thing's reinvented. They take these unused gift cards and you get back cash in return. Now, the red box business, I know it seems like a dinosaur. It has slowed the top line a little bit, but there's 66,000 of these kiosks, and a lot of people still use them. In fact, there was a commercial on TV the other day touting an online movie, some like on-demand movie, and they said, we'll get it before Redbox. So these guys are still a competitive alternative, even to be mentioned in that ad. Now, the stock, it's been on an absolute tear, taking out the volatility, particularly after 4 weeks ago. That's when they announced they were raising the prices. DVDs, $1.50 from $1.20. Blu-rays, $2 from $1.50. And video games now $3 from $2. Also in the last quarter, operating margins increased. Oliver talked about that, 80 basis points, driven by that Coinstar unit. Margins there are going to blow your mind. 28.7% from 24% a year ago. So after blowing out that quarter, the Street hiked their earnings estimates for fiscal year 15, looking now $7.90 from $6.57, and I still think that's going to be too low. Now, on that note, there are 300 open puts for every call. What does that mean? It means that big boys, the big boys out there, are trying to crush the stock. They think it goes down, or they're trying to push it down. In the meantime, I'm looking for it to go to 86. Huge outsides. The volatility is there. If you're not used to volatility and risk, it's probably not for you. I like it as a trade. I also like it longer term. All right, Matt, I defy anyone watching the show to name a company that they will not give you cash for a gift card. Name a favorite before I ask about the stock. Cracker Barrel. Let's see. How do you spell that? Name another one. No, Cracker Barrel on the list. There you go. Name a retailer. Name a gift card you got and you really don't want to spend it. You'd rather have the cash.
Honestly, Best Buy. Sorry, Heatha. I'm sorry.
Best Buy on the list. Go to the kiosk, get you some cash for that. Okay, what do you think of the stock?
I'm going to go against the big boys with you. I'm completely on board here. They hiked the prices, which I like that, but they're trading at 9 times next year's earnings. The PEG ratio is 0.66, and next year they're expected to buy back 20% of their outstanding stock, and it just broke out in the chart. I mean, you can't find a better stock on all cylinders right now, in my opinion.
I do like it. I think the reason why investors have been down on it is this company has a track record of failed ventures. So I think that's where the people are still saying.
That thing with the cell phones, you throw your cell phone in the machine, that was ridiculous.
But I think with what's working, they have huge international expansion capabilities. So despite the big run-up, I do like the stock.
All right, guys, we got to leave it there. Everyone.